In this lesson, I'm talking about the inertia of people who don't do anything. What I'm talking about is a loyalty tax that people pay in not getting their mortgage reviewed with either their existing lender or testing or starting to shop in the marketplace. Now, if I draw a timeline, and so this is a period of time, okay, and from this timeline, we're basically seeing that you got a mortgage at this moment in time. Now, as you got that mortgage at that moment in time, it's tracking along, interest rates are taking it down, they're taking it back up and so forth. Well, what's happening over that time is more and more competition is coming into the marketplace. Now, as that competition was coming into the marketplace, it meant that the net interest margin is being squeezed. So as these loans are going up, new lenders are coming in offering cheaper interest rates at a lower level. So if you haven't done anything, there is an arbitrage between the rate that you would be paying and the rate that you could be paying if you went back to your lender and said, hey, can you give me a better deal? So we know this because we look at the annual reports from the big banks, which they issue to their shareholders, and it's showing that there's pressure on net interest margin at the moment because of competition. And so that is ultimately meaning that new borrowers are getting a better deal than existing borrowers because of them being lazy or the inertia of not finding the time in terms of going to do that. Now, these new borrowers are shopping the market. So they didn't know what happened back then. They're obviously seeing the opportunity in the market at this point in time, not at this point in time. So ultimately, they're automatically getting a better deal. But it's the existing borrowers who have had their loans for a period of time that need to refresh those loans. And there's no better example, if we go and have a look here in regards to what we see with this example here, we can see that it's only offered for new borrowings. So they're basically saying that we'll give those people, the new borrowers, potentially a sharper interest rate than those people who are waiting over a longer period of time. Now, at the time of recording, this is what we're seeing the interest rate in. So that is obviously going to change as the cash rate and variable rates adjust. But it's really clear. Why would they say new borrowers only? I mean, if that was the cash rate, they're not contacting those old borrowers. And that is the other big story here. So when we come to talk about this inertia, this laziness, we also need to understand that you might be thinking, well, wait a minute, banks should be contacting me and saying, oh, we're giving these new borrowers this really sharp rate. Would you like to have this better rate? They are not going to do it. They would get a class action from all of their shareholders basically saying, what are you doing here? We need, you're just diluting our profits. We learnt in lesson number 1 about the importance of that net interest margin and that profit. So they're not going to proactively do that. And they shouldn't be expected to. At the end of the day, they're in the business to get the balance right between delighting their customers and making a profit for their shareholders. So don't expect them, don't expect to complain to regulators or anyone like that in terms of it's not fair. It's on you. Don't be those lazy people. Don't be that person. Be the person who's proactive, who's taking action in terms of what's on offer and getting that reviewed, okay? Now, I realise that there is complexity, and we'll talk about complexity shortly, but this is effectively in one of our other lessons, but this is effectively what we need to understand. But here's the message. Don't be someone who's paying a loyalty tax. That's your hard-earned money. Money that could be paying that interest down quicker, paying the principal off quicker, so it means you actually get charged less interest. Be that action person. Be the person that takes action. And that is a summary of this video lesson number 6 in terms of don't pay a loyalty tax. Avoid it where you can and get a better deal for yourself. So thanks for watching that educational session. As you know, I'm passionate about this stuff and I really do want to see you take action. Now, whether you do that yourself, that's fine. But if you do need help, I am super proud of our mortgage team here at Empower Wealth, and they would love to help you. They are helping thousands of people every year just like you. They're multi-award winning. We've won customer service awards and national awards for the work that we do. So I know that they will be able to look after you. So leave your details below, but please make sure you do something with this information and knowledge that you've just learned about. Now let's get into the next episode.